Welcome back to the Revivals Invoke. This is the sixth survival. In this survival, we're going to be going over power of three. Now, what is power of three? What is the verbal definition of power of three, JJ? Power of three is a price pattern that consists of three phases. These phases are accumulation, manipulation, and distribution. Okay, I'm going to teach you real quick, just what are the basics of each of those phases. Okay, so we're going to go ahead and draw just a tiny little diagram wherever my brush tool is. Here it is. So accumulation, okay, sounds similar to consolidation because that's exactly what it is. Accumulation is this right here, this back and forth right here. That is accumulation, okay? So we can go ahead and put a text next to it, and we can say accumulation, okay? This right here is accumulation, okay? Next is manipulation, okay? What price will do after the accumulation is it'll break out, okay? It'll have to come out of the consolidation. It has to move away from the accumulation, okay? Because it just has to do that. Because if you notice in the chart, if we go back to the chart real quick, you will notice that before price moves anywhere, it consolidates in some way, shape, or form. Look, like right here, consolidate, or in this case, accumulation, move higher. Consolidation right here, move lower. Very simple, isn't it? Accumulation right here, move higher. Very simple. Accumulation here, move higher. Accumulation here, move higher. But you get what I'm saying, right? So let's go back to that diagram wherever I was drawing it at. Right along here. All right. I forgot how I even drew this thing, but I think it's somewhere around the lines of right here. About that. So this is accumulation, okay? Accumulation is will prepare the market to move, as you see in the examples I've just showed. It has to accumulate first, and this is a universal rule when it comes to markets in general. Price will accumulate no matter if it's stocks, indices, commodity. It is going to accumulate before it moves anywhere, okay? And the reason I'm saying this is after accumulation, you have something that's called manipulation, okay? For example, let's just say price manipulates higher. Up, down, up, down, up, and up like that. This up move right here will be considered manipulation. So we can put a text box right here, name it manipulation. So this move up right here will be manipulation. Then afterwards, price will come back down, okay, like so, and create distribution, okay? We can set a text box over here and put distribution in it, okay? So we have accumulation, manipulation, and distribution, okay? Now, we can either call this power of three or AMD. Why AMD? Because it's the first letter of each, of each phase. A, accumulation, M, manipulation, and D, distribution, okay? Now let's go over the accumulation phase really quick. We're going to go over the anatomy and why each of these phases exist. Accumulation, like I said earlier, is to build up orders. On which side? Both sides. It builds up orders up here. This is buy side liquidity, as you know, and it builds up orders down here. This is sell side liquidity, okay? Whichever side of liquidity it manipulates first is going to distribute on the other side, okay? So since price in this, anatomy or this little drawing, price manipulates buy side liquidity first, manipulates the buyers first. So we eventually want to see price come down into sell side liquidity, right? According to whatever confluence you have, because this can be different. I will show you some examples on how sometimes it can accumulate and just distribute. It doesn't manipulate, okay? Because it'll use the manipulation as some form of retracement. But if a retracement has already occurred, it won't do manipulation. But none of that right now. Price accumulates, creates sell side and buy side liquidity. Price is like, okay, let's leave this range, shall we? Let's finally leave this range. After leaving the range, it leaves on a bullish perspective, purging buy side liquidity, okay? After that, you want to see some form of a reversal taking out sell side, if that's within your bias. If you want to see price go lower after, the move higher, manipulating into buy side liquidity, you should want to see some sort of reversal, after the manipulation has occurred. This is called the distribution. This is what you want to catch. You do not want to trade, and I'm going to say this a couple times. You do not want to trade accumulation and manipulation, okay? You can trade the manipulation but it's close to impossible, especially nowadays with these markets. It's close to impossible because sometimes what price will do is it won't even really like manipulate like this, like how I drew it. It won't manipulate like that. I'm just drawing it just to show you how it looks. Sometimes what it'll do is it'll move back and forth, back and forth, back and forth, back and forth, right? And what it'll do, for example, if it wants to go lower, if the overall bias is lower, let's draw a bias of liquidity up here. What price will do is when it manipulates, it won't even manipulate like this large move. It'll literally come up, say boop, and then it'll drop. It'll do that, and it's been happening a lot recently. So back then it didn't really do this a lot, but now it's doing it a lot. So I'm saying that to say, do not trade accumulation and do not trade manipulation. Okay, it's okay if you get caught up in a manipulation. It is okay, but I'm trying to teach you how to not get caught in manipulation, how to see it, and how to trade away from it, how to trade against it, basically, how to trade against manipulation. Don't be with the manipulation, be with the distribution, okay? And if you get caught in an accumulation, don't even beat yourself up about that. Don't even beat yourself up about that, because I get caught in accumulations too, okay? Everyone gets caught in it. It's inevitable, okay? It's bound to happen. You're going to get caught in an accumulation once or twice. Like price will be moving super fast, right? You'll get in a trade and then price will just slow down on you and start accumulating. It happens to everyone, okay? I'm going to teach you some techniques in the future to help you detect when accumulation is about to happen, but accumulation, it's not super predictable, but I'm going to in the future teach you some things to give you some insight on predicting when accumulation is going to occur. But if you do get caught in manipulation, I mean not manipulation, but accumulation, don't beat yourself up. It is inevitable. It's going to happen. It is okay. Just, if you lose 3 times during the accumulation, or you lose enough to where you're like, okay, I can't trade no more. I don't want to lose anymore. Just back away. Don't back away too far to where you don't look into the charts, but back away to where you can go back in and look and be like, oh, okay, this is what price wants to do. Now, I was getting cooked in accumulation, but this is what price really wants to do, okay? But this can happen. That's why I'm saying do not trade the manipulation. Back then I used to say you could. Keyword could, not should, but could. You could trade the manipulation, but it's not advised anymore. Anyways, we have accumulation, manipulated higher. If this follows your bias, you want to see price go lower. And our bias is bearish in this, in this drawing. So we're going to go over a real example. And what I mean by real is an actual candlestick example inside actual price action that is real. You get what I'm saying. I don't have to keep explaining. But here we go, okay? Now, I will advise you with one thing. Price isn't going to have a sideways consolidation like this. It's not. It's not going to have a perfect consolidation. Sometimes it will. Most of the time it won't. It's just not going to happen, okay? And with this example, it didn't happen, okay? So let's go over this, okay? In this example, we can clearly see that price is accumulating right here in this range. But what is it doing, okay? These might confuse you a little, but you will get what I'm saying after I'm done explaining. Price is accumulating higher, okay? This is a form of accumulation, okay? Because sometimes what price will do, and as it's done in this example, let's draw it real quick. It'll accumulate up like this. Not too steep of a uptrend, but it'll accumulate up like this, okay? And then, for example, let's say it has like one little drive down like this, and then it'll have a pop up higher, and then it'll just go wee, and that's exactly what's happened here. If you want to look, if you want to, as you say, make them look similar or detect the similarity between them, you will see what I'm talking about. Price accumulates as it does here, and then we have that final push up. That's this push up right here, and then it will drop, okay? That push up is that final purge of liquidity. You get what I'm saying? It's that final purge when the time comes. Because remember, time is before price. For price to move, the time must come. And in this case, that time is 9:30, the US equities open, or if you want to keep it short, the US stock market open. Very simple, okay? So that's what's going on in this scenario right here. So let's go over this. Price is accumulating higher, purging buy side, consistently purging buy side. So these would be some liquidity purchase, correct? Yep. Price is purging liquidity as it's going higher. Now we're going to mark this. This is 930 right here. This right here, that red line is 930, okay? As price is purging buy side, what is it doing also? Where's my drawing tool? Okay, here it is. It is also creating sell side. So this tells us price is going higher to purge buy side, so it can later come down and purge sell side liquidity. Well, I marked it as liquidity purge by accident. So it's simply going up, or not liquidate, I said liquidating, but accumulating, so it can come back and, you know, purge all the liquidity it's accumulated while it's been purging these highs, okay? This is another low right here. Sell side liquidity. So price is purging liquidity higher, and it's accumulating sell side. This is telling us that it wants to go down. Why? Because there's liquidity resting here. And what does price do? It seeks liquidity. It's not accumulating this for no reason. Remember that. It's not doing this for no reason. Okay? Sometimes, but rarely, what price would do is it'll do something like this, but it'll sometimes just push higher and push higher and push higher. In this case, it did not do that. Price is purging buy side, and is not pay attention to this. It's not running through it. Okay? It's purging it. Every time it comes and breaks a high, it comes back down and retraces. Even with this high here, when it purged it, retracement. See that? So it's not running through the highs. If it was running through the highs, then yes, it wants to go higher. But in this case, it is not doing that. So here at 930 at this line right here, I'm going to delete it so we can get a clearer view of this candle. Right here at 930, price comes down and adds another low to our accumulated liquidity right here. So that's another point of sell side liquidity. It adds another low, so we can have more. So price can have more sell side liquidity to seek, I guess you can say. Then after that, price reverses higher. It has that final pop up. It has that final seek, or that final purge of buy side liquidity before going lower. Okay, and as we see, price did not run through this last high here, or that last purge of liquidity. It did not do it. So it wants to go lower, obviously, right? It wants to go lower because it's not showing any willingness to, purge even these highs here. It didn't show any willingness to push through it. It didn't. Look at that. After it took the high out, it was struggling to go above it. And that's the same thing with this situation here. So, in simple terms, we have accumulation, right? This final pop-up move, this final purge of liquidity of this accumulation range is manipulation, right? And then we have a reversal here. This is the beginning of distribution. The reason I say beginning is because we haven't distributed yet. We are turning around. We're shifting market structure so we can distribute. Okay, and that's where this comes in right here. This is that break in market structure, okay? Price retraces to this Reaper right about there. Retraces to that Reaper. And then it comes into this singular order block right here. Comes above the lower quadrant, but does not go past the mean threshold. It's respecting the mean threshold, which is great. That's a good sign that it's going to respect this Reaper and this order block, since they are literally in the same place, okay? And another thing I was going to say, well, I'm about to say right now, normally, when you're taking a setup like this, like taking a power of 3 setup, let me draw this just so you can see it better. Let me draw it right up here. Normally, wherever my drawing tool is, you want to see price. Well, you will use the bottom of the accumulation, or you will use the accumulation ranges, accumulated liquidity, as your target. But in this case, as it was distributing or beginning to distribute, it violated those lows. So what will you target? You would simply target something that's available, or I'm trying to get the word, but is safe to take. Yeah, that's the word. That is safe to take and is not too far. Okay, since it already violated the lows you were going to take, or you were going to take as a target, you look for something that's safe, not too far away, and is actually logical and makes sense to take. Down here are Asia lows. Do you need proof of it? Sure. Down here is Asia lows. Okay, so that is a point of interest in your mind. That this is a point of interest. This is sell side liquidity right down there. That is sell side liquidity. If I can drag it over just a little bit, that is sell side liquidity. Okay, but normally Going back to this drawing right here. Price will manipulate higher, of course, of course, of course. And then the setup will form something around here. Let's say this is your retracement, this is your entry, right? Then after you got your entry, you want to target the lows of the accumulation if you're taking a bearish power of 3, in which we are doing in this example here. So if you're taking a bearish power of 3, you would normally want to target the sell side liquidity side or the sell side of the accumulation range. In this case, you would want to, of course, but you can't, because the liquidity that was accumulating within that accumulation range, it got violated before we even distributed, which was this drop lower here. So continuing going over this, price is coming to the Reaper. It's, consolidating a little bit. And mind you, you're going to get caught in accumulations, period. Like, it's going to happen. So once you got in on this, you got caught in a little accumulation, but you trusted it. It keeps respecting the Reaper as you see. So we're like, okay, we're not going to get out. We're going to hold this, okay? Price is finally like, okay, we're done. We're done chopping around. Let's displace, shall we? And Price is like, okay, let's do this. Wee. And why did it do this? Mind you, there is a macro right here. 1050 to 1110. That's your macro, okay? So we had time distortion. I've said this before in the time distortion video. It's either in the macro or either in the time distortion video I said this. But if there is time distortion right before a macro, that macro is about to deliver. And as we see in hindsight, it's sure to deliver. And it continued delivering. It continued delivering all the way down to that sell side liquidity point down there. So let's go ahead and draw your short position. Wherever my tools are. Here's your short right here at that Reaper. I'm gonna go ahead and move it over a couple times, right about there. And you would set your stop loss at the top of the Reaper, right there. And your take profit goes right here at Asia lows, giving you a 2.5 risk to reward. Pretty good. I would have took this trade. I really would have, but I had to go do some testing. It's close to end of the year. So down there literally says April 28th. I'm about to go to next grade. All that end of grade testing. But enough of that. This is power of 3. This is just a bearish example, obviously. Okay. A bullish example will be the complete opposite. Price accumulates, it manipulates lower, okay, and then distributes higher. Very, very simple. Okay. Very, very simple. Now, before I end this video off, I need to show you something. Okay, I got to show you something. There was an example that I saw previously where price just accumulated and shot higher. I need to show you this before you go, because I do not want you to get caught in this. Okay, this is something I do not want you to get caught in. Wherever that example was, yeah, right here. This is the example right here. This is what I was looking for, okay? What I said earlier about how sometimes price won't manipulate because it's already had a retracement, this right here is what I mean, okay? We have a gigantic fair value gap on the side, right along there. We can keep it orange. It looks pretty cool. It matches my chart colors. It syncs with it. We have this retracement here, okay? After the retracement, it accumulates, okay? Now, I'm going to ask you a question. You can answer this on the other side of the screen. Does it have a reason to manipulate lower before going higher? Because obviously our bias is going higher because it's respecting this, bullish fair value gap if you just want to use that for all your bias. But for example, let's say our bias is bullish and you expect the price to go higher. In this scenario, does price need to, or would you expect another retracement before price goes higher? If you said yes, I get why. To confirm your trade, right? You wanted to confirm it. But in this case, it's already confirmed. Now you just got to look for a setup within this accumulation. Okay? Because like I said, it can just accumulate and distribute like it did in this example. Literally just accumulate and boom, distribute. That is it. That is it. That is it. That is it. Because if you already see a retracement, okay, you know what? Think of it as a, I can't explain it, but I'm trying to think. Okay, let's think of it as a game, right? For example, let's say you are, I don't know, gathering resources, okay? You're gathering resources to build a big house, right? If you've already gotten a lot of materials to build your in-game house, a lot of materials, like you know for a fact that it's going to be enough materials to build this house. Would you go back out and get more materials? I mean, you might, just to make sure. But for, let's say, for example, after you get those materials, it turns nighttime, and if you go back out and try to get those materials, you have a chance to die and get hunted by the wolves that are in the forest. So it's basically the same thing that's happening here. You wouldn't want to see another retracement, because if you did expect that, you would miss your entry and possibly get cooked. Same thing with the game. If you have enough resources and you know you have enough resources, there's no point in going back, because there's a chance that you can get eaten by the wolves, and it's just going to be stupid, and you're not going to be able to build your in-game house. Same thing with this example. It already retraced. It already came to a point of interest. At all now it's doing is just accumulating so it can distribute. Okay, it's just accumulating so it can distribute. And for example, if you did take this setup here, if you did take this as a setup, we have a liquidity purge right about there. I can mark it as liquidity purge. Jesus. Got a liquidity purge right about there. After that, price rejects off of it. We got a order block right about there. When price comes into the order cock, or the order block, whatever you want to call it. I'm trying to adjust it to where I can pull this out, but it is not. There we go. Okay. When price pops above or breaks the high of the order block right here, you want to see price come back into it. If it does, that's your entry. But before you enter, make sure it's respecting it. Okay, and make sure it is not breaking the mean threshold, because for an order block, the mean threshold is a very important level, and you do not want to see it break through it. It can come and touch it and come below it just a little bit, as it did here, but you do not want to see it break it. Okay, it tapped the mean threshold once, tapped the mean threshold twice. When you start respecting it twice, you should be like, okay, let's get in. This is our entry. Let's get in. So let's go ahead and set a long position. I don't know, right about there. It doesn't really matter. And you set your stop loss at the low of the order block. And for example, let's do standard deviation, shall we? Standard deviation from this low to this high. Boom, like that. We have our deviated range. The 1.5 standard deviation rests just above this high here. Now, do we have anything else that we can target? Anything else? Anything else? This right here. But oh no, no standard deviation lands above it, so don't want to target that, obviously. The most conservative target in this case would be the 1.5 deviation, which provides you a nice 7 risk to reward, as you see down there. So pretty amazing. It really is amazing, right? But if you was to take that 4, in which you possibly could, but I personally wouldn't do this because this is a little too far, and then the 4 is not landing close enough. If you were to take that 4, that would give you about a 15 risk to reward, which is kind of outrageous. And in this example, this is kind of outrageous because the standard deviation is a little far from that high. So the closer it is to a certain point of interest, the better the target is. That's why I took this high. I advise you to take this high, because the standard deviation is closer to this high than the 4th standard deviation is closer to this high. Okay, so to be safe, take the 1.5 standard deviation, which will provide you with 7.5, which is a pretty good setup. Okay, now we're gonna go ahead and delete this so I can clear this chart before I end this video off. Boom, bam, bam, bop. And here we are, the end of the video. We're at the end. You made it. Can't believe you watched this whole thing. What is this, a 23-minute recording? Yeah, it's 20, going on 24 minutes now. Okay, we just hit the 24 mark. But I'll be in this video here. This is the 6th revival, I think. Power of 3. You learned it. Go on your charts, do whatever you need to do to study it. I hope I taught you well so you can learn it and be able to absorb it easily with a nice, simple, constructed, just nice and easy and very put together so you can absorb the information very easily. Okay, I hope I did my job on that well, and I'll be in this video here, and I'll see you guys on the next one. Peace.